Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Selby, and today we're going to be taking a look at 3 stocks that analysts believe are set to grow their dividends over the coming year. Plus, we'll also ask our guest to name 1 stock who could see its dividends on the chopping block. To do that, we're joined by Dr. Michael O'Neill from IML and Dr. Don Hamson from Plato Investment Management. 2 dividend doctors with us today. Very exciting. Let's get straight into it. First up, we have Amcor, which is expected to grow its dividends by 5.52% over the coming 12 months. Michael, I'm going to start on you. Is it a buy, hold, or sell?
It's a buy. So Amcor is a leader in packaging for quite defensive end markets. We have seen some softness in their volumes recently, but we track their customer pricing very closely, and the need to push price and sacrifice volume is actually moderated. The markets look to be more favourable, and as the volumes recover, we should see that drive operating leverage from Amcor, improve its margins and grow its dividend.
Okay, its share price has sunk around 16% over the last 12 months. Don, over to you. Is it a buy, hold or sell?
It's a sell from us, Ali. We don't think it's growing fast enough. It's not cheap. A lot of the defensives aren't cheap, so we think we're weighing up how much it's going to grow versus the price you're paying. For us, it's a sell.
Okay, next up we have Suncorp Group. Analysts expect its dividends are going to grow by 21.13% over the next 12 months. That's quite a lot. Don, over to you. Is it a buy, hold or sell?
It's a buy. We like the insurers, actually. I mean, you may not like it when you open up the letter with your new premium and it's up 20%, etc., but clearly if you're a shareholder, that's actually very good. So you've seen a lot of premium increases. And interest rates over the last couple of years have obviously gone up. Maybe they're going to plateau at where they are, but they're a lot higher than they have been in the last couple of years. So they take your money, that higher money, and they invest it and they make a bit more money on it. So we like most of the insurers and definitely Suncorp, so buy.
Investors in Suncorp have also made some run in money recently. Its share price is up around 14% over the last 12 months. Over to you, Michael. Is it a buy, hold or sell?
It's a buy. I'm sure, like Don, we're eagerly awaiting the results of the verdict of the appeal of the ACCC's decision on the sale of the bank from Suncorp to ANZ. That could be a windfall capital return to shareholders, but you don't need that to have a buy on the stock. Certainly to Don's point, there are several things underpinning the growth in Suncorp's dividends over the next few years. Higher investment earnings. I think the yield on funds held to pay future claims has gone from 1.5% to 5%. And then again, pricing motor and home. It stings as a consumer, but given the weather costs, the supply chain issues and the reinsurance costs, predictable earnings growth for the years to come.
Okay, last up today we have Fortescue, which is definitely a favourite among our readers. Analysts believe its dividends are going to grow by 26.33% over the coming 12 months. Michael, last one for you. Is it a buy, hold or sell?
That's a sell. So we look at the iron ore market and the supply and demand imbalance there and the prices that iron ore have hit recently, and we still think that prices in the order of $130 to $140 per tonne are not sustainable. Now, when you're investing in commodities, it's important to remember that ultimately commodity stocks follow commodity prices. It's dangerous to get into the trap of looking at them on price to earnings or dividend yields when the commodity price implied by the current share price is not sustainable. So we see this stock as exposed not only to potentially unsustainable dividends, but also the volatility of the capital that comes with that.
Okay, its share price has lifted around 23% over the last 12 months. Over to you, Don. Is it a buy, hold or sell?
It's a buy for us because commodity price or iron ore prices have held up and are much higher than they were last year. So it's going to be making better profits, and even their lower quality iron ore has held up well. So we think in the short term it's definitely going to have some good dividends. But I do agree with Michael. I mean, you are beholden to whatever the commodity prices are. So you've got to be very vigilant if you're an investor and cut your losses if commodity prices change very quickly.
That just shows that 2 views make a market. Okay, I'm really excited for this. We asked our guests to bring along a stock that is slashing its dividends in 2024. It's a little bit of drama. Don, what stock have you brought for us today?
Well, in a previous episode, I talked about falling lithium and nickel prices, and you cannot defy those if you're a commodity producer. That's going to be the revenue driver. So I could pick pretty much any one, but certainly stocks like South32 are likely to have to cut their dividends given that their underlying commodity mix has changed, and no matter how much you try and cut costs, you're not going to make up for those big falls.
Okay, over to you, Michael. What stock do you believe has its dividends on the chopping block?
Well, for me, that'd be Pilbara, and I completely agree with Don's focus on stocks that are most at risk. And with lithium, with 50% fall in prices in the last quarter, Pilbara has had a boon of cash flows in 2022, 2023, but they've come to an abrupt halt, and the company's flagged that they won't be paying an interim dividend.
Okay, well, I hope you enjoyed that income special of Buy, Hold, Sell as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.